Hello, my YouTube friends. I hope you're all doing well, and welcome to Palermo. I'll show you a view in a minute. Anyway, today I'm going to talk about finding valuation as well as limiting the amount of holdings that you hold in a portfolio, which is often why you hear me talk about similar ones from time to time. And then I'm going to go into the real estate market and overspending and all sorts of things. So it should be a really good video, so stick around. Good morning. My name is Adam Kahn, and this is Investing with Adam K. I hope you're all doing well. It's Monday. It's June 24th. My back is still killing me, so if I whine or go from now and then, understand I don't mean to. I just get these spasms. So here I am in Palermo, where I got to tell you, my first impression is incredible. I actually found my microphone too. But beyond that, the weather is perfect. It's kind of beautiful. They could clean up a little bit, not to say anything bad. I hate to be negative on people, but when we walk around, we see a lot of garbage and everything else. But you've got this beautiful ocean and this cute town. The people seem really friendly. It's super affordable, at least so far. So I'm kind of excited to explore a bit. Unfortunately, my back is hurting so bad. I missed a tour that I was really excited about. My son and my wife went on a mafia tour, which of course makes sense, that it would be here. Anyway, let's start with limiting the amount of stocks that we hold in a portfolio and why we do that. Please keep in mind, none of this is investment advice. You guys need to do your own research when it comes to investing your own money. Don't take anything I say as something you should do for your accounts. I'm just a guy on YouTube, and you shouldn't listen to me, nor should you listen to anybody on YouTube. You should really seek outside advice from a financial planner, get some advice of what fits your particular situation. And forgive me, sometimes in the comments I get a little bit sensitive to that as well, because when you ask about a particular stock or anything else, I'm guessing you've researched it and watched it and have an opinion on it already. And I don't know your entire financial portfolio, how much you're worth, how much you make at your job. Like, there's so many things to take into consideration, even your age and your expenses and what you can afford to put away. Because what I'm putting away, it fits what I'm doing, and I'm just kind of sharing that. And I'm sure there's some people that fit in the same category as me, but I'm also sure there's some that don't. That's why I don't go into the amount of shares or things like that, because there's really no reason to, because my situation is going to be different than yours. So anyway, why do I limit the amount of stock holdings in my portfolio? There's a few answers to that. One being that if I'm trying to beat the S&P 500 or whatever metric that I'm trying to stay ahead of, if I own too many different stocks, I'm essentially just going to create my own mutual fund, and it'll be really tough with 20, 30, 40 different stocks to potentially stay ahead of that metrics. If I can limit myself to 5 to 10 holdings that I really believe are going to outperform, and that I can do a good research job as to why I think they'll perform, I have a much better chance, at least in my opinion, to outperform the indices. Now, me personally, I try to stay with somewhere between, like I said, maybe 5 to 10 different stocks that I pick. And I don't tend to go with ETFs, so I understand that would be uncomfortable for some people. And then I keep some cash on the sidelines to buy things that I think are out of favor that I may not necessarily be holding forever. When I try to buy the ones that I really want to own, and I tend to be overly specific to, like, the Magnificent Seven, for example, and I'll go over some of that, and I'll share with you the holdings that I hold. But then I keep some cash on the sideline to try to pick up the things that I think get out of favor and maybe get oversold. I've talked about one recently, which is Boeing, and then another one, Target, which I was fortunate enough to pick up in around $110 a share to pat myself on the back, a tiny bit lower. And then when it went up, I actually sold it around $170 a share, and I've re-entered the position back around where it's trading now, because I think this is where it's fairly valued. I was actually pretty surprised to see it get down to $110 a share. I saw that as a great opportunity, and that was when it was in the news for having woke politics, that they were closing stores and things like that. The interesting thing is, one of the things that I pointed to, and I look for this in other companies too, closing non-profitable stores is really good for big companies like Target. If they get into a position in somewhere like California, which is what was happening, where they were having theft, or whatever they say the reason is, and it puts them in a position to get out of leases and close up stores that aren't profiting, they're going to end up sticking with the stores that are profitable, and it's likely going to help their bottom line. So while it sounds like negative news because they have to close stores and people get really worried about that, the reality is they're closing things that are losing money, and they're a big company that have plenty of stores that are profitable. So it focuses on those and stops having the ones that are dragging those earnings down. And then for those of you who are curious about my core holdings, I know I talk about a lot of stocks outside of these, but it's Meta, it's Starbucks, it's Microsoft, it's Google, it's Amazon. I also have a good position in Intuitive Surgical, as well as Palo Alto Networks. And then I think of my Exxon Mobil and Chevron position as one position. I know they're two companies, but I really feel like that's my space in oil and drilling and that stuff. And to be fair, as much as that's in my core holding of a stock that I plan to hold forever, I still keep an eye on that sector to make sure it stays up with what I hope, mainly because I do worry about us moving away from oil and gas and things of that nature. But I don't think we'll really get away from them, and we're sure not going to get away from them in my lifetime. When I'm thinking about them, it's more in terms of my family's future, not mine, which is the way my brain works. I do think about them more than I think about me. Now, as I continue to get older, I will probably shift a lot of that portfolio into more dividend producing stocks, even though some of them have now offered a dividend, mainly because this will sound sick and crazy, but what goes through my head is when I pass, I want it to be in a position where it's just earning income, because my wife will be easily able to figure out how to live off of that. She'll be able to do the math of, oh, the account brings in this much amount a month, and not have to stress about what it owns and what it doesn't own. And if I own boring companies similar to the Starbucks one, that maybe have a 3 or 4% dividend, and then I'll mix in some that have higher, that hopefully have some growth potential in them as well. She doesn't have to worry about the ups and downs in the market. She doesn't have to think about it. She'll just have to talk to the advisor who's handling the account and understand how much is coming in, so she can do the math to figure out how to live her life with my son or wherever she is at that point going forward. Another reason that I try to limit the amount of holdings that I hold is it gives me a better way of actually keeping up on those companies, understanding them, and really feeling comfortable that they're a good investment, not a good trade. And while it may be too big a percentage that other people would feel comfortable with, then I would recommend having ETFs or things of that nature in your accounts, just off the cuff. Again, not advice, just my thoughts. Um, but when I limit the number of shares, not only does it, or companies, not only does it give me an ability to outperform, it gives me the ability to have a better feel for the companies I'm investing in. And then I stick with the companies that I really think are the best. Now, those of you who've been watching for a while, you're well aware I have 3 different accounts. So I still have the ability to buy companies like Nvidia as a trade. I think they might be one of the best, but the way that they've gone up so quick over the past year, not even, it's hard for me to picture them being able to continue that type of growth. And if they do, maybe for another year or so, if they're able to continue to sell those chips and maybe even compete with some of the people who they've been selling them to, which was one of the things that I actually was paying attention to and reading the other day, is that that's one of their goals, is to compete with something like Amazon Web Services and do it themselves. But to be fair, they're also their customer and they don't want to step on their toes too much. But it doesn't allow me to, the opportunity to look for what I think might be the next Tesla. Now, I'm going to miss out on companies like Palantir if they happen to be the next greatest thing, or there's a whole bunch of those. because I'm at a point where I don't want to take shots in my account anymore, if that makes sense. Now, I don't think there's anything wrong with doing that, but over the past 40 years of investing, or 38 years of investing, and 50 years of my life or so, what I found is when I take shots, overall, they don't seem to work out. Maybe one really hits it big, but for the one that hits it big, I probably have 20 that don't. And then usually what happens is the stock just sits there for such a long time that if and when it eventually takes off, I've missed out on opportunity of owning big and boring, even if that's a McDonald's or a Johnson and Johnson, where I would have been receiving a dividend, the stock would have slowly grown, and I would have had something to have grown the account versus waiting for that thing to be the next big thing. Oh, and I forgot because I don't think I mentioned it. Apple is also one of the stocks in the account. Sometimes I kind of forget because I actually covered Apple and gotten out of it when I listened to Dan Niles and some of the things he was saying because I felt like it was overvalued as well. And then in the videos I was doing, which again, thank you guys because it reminds me what I want to be doing with those long-term holds, is I do think Apple is one of the great companies. So I ignored my valuation, which is why I've talked about, depending on what you're getting into things for, sometimes you kind of want to ignore valuation. And I put that trade back on. Now, understand, and I'll talk about it for a little bit. Apple is growing at like 4%, and they're trading at 30 times forward earnings. That's a terrible valuation, in my opinion. But I still go back to, I think they're a great company. And if I plan to own it for 10 or 20 years, I shouldn't be paying attention to that. So I put the position back on. Needless to say, it's had a great run. I didn't expect that to happen. And to be perfectly honest, I expected the stock to go lower. So I feel really fortunate that I ignored my concept of, paying attention to the values, staying in it when I think they're valued properly, and just went with what I've been teaching or suggesting on the video, which is just go with the great companies and the valuations will work out over time. Now, maybe Apple has a big pullback and it goes lower like I originally thought, but in the meantime, I think it's rallied almost $50 since I bought it somewhat recently. No, $40. But that's incredible because it's only been a few months and I don't expect that type of a return out of something, especially something that I think is so overvalued already. But I guess their announcement of what they're going to do in the AI space kind of puts it back into the realm of they're the first to take it to the individual. They're not competing with AI on a different level. I was listening to this, what's his name, Tech something, who I think is pretty funny and pretty interesting, but he's probably a jerk. Tech lead, I think he goes by. But he was talking about Apple and how they're going to bring it to our phones and they're going to be the first to individualize it to us personally because of the data that they have. Whereas while Google has our search data, it's a little bit different. And Facebook and the others, as much as I love Meta, that is my largest holding, their data on us is also a little bit different. Where Apple has the apps that we own, where we live, our pictures, they've got all sorts of information that we give them access to that they'll be able to use in the AI space to hopefully potentially make our lives easier and make us more reliant on the phones. The other thing they've done is unless you have an Apple 15, your phone is going to be outdated and you won't get the new things that the AI is going to do, whatever that is. So I'm guessing people like me who have a 14 or lower, that they'll find themselves seeing their friends with these new programs that it does and new capabilities, and potentially creates a whole new batch of people who want the new phone to get those upgrades. So it's going to help push those sales, and maybe their 4% growth, they'll start doing a little bit better, justifying the new stock price. They also, part of it is they do these huge buybacks, which I have mixed feelings about because it's a little bit of manipulation when they do it, especially if your bonus is based on where the stock is trading, because then maybe you're going to ignore valuation and overpay just because you want to push the price higher. It also creates opportunity where people on the board can use the buybacks to sell into it if they know that the prices are overvalued. So I see that as an unfair advantage of the people who are already working for the company. At the same time, as a stockholder, I guess I would rather buybacks for tax reasons than I would raising a dividend. But, but I also think they shouldn't have to raise the dividend. It just, anyway, that's just my spiel on what would be fair in life. The other reason I don't invest in things like Palantir is I'm not as comfortable that I understand exactly what they do. Whereas if I look at a company like Amazon or Google or Meta, I understand the product, I understand what they're selling, I understand how they're profiting. So it's much more comfortable for me when they have a downturn to still understand the company and what it is they do. So I don't mind investing in it. And if you want to be rich, what I consider wealthy is spending less than you make and having a savings. That doesn't matter how big or how small it is, but you have to be prepared when those unexpected things come up, because they will. Whether that means you lose a job, and for those of you who own a house, whether that means the air conditioner breaks, or other expensive things that you just don't have in the budget because you don't think about that on a monthly basis. It's why people who are older talk about having a nest egg for these unexpected events. Unfortunately, over time, whatever it is, they happen. Even if you own a car, you know that sometimes you need to replace the brakes or whatever it is that you need to replace, unless you're constantly one of those people that's buying a car every 3 years or leasing it or whatever it is, so that you don't have those unexpected things. But if you're cheap or frugal or whatever you'd like to call it, might be more polite than cheap, like I am, you'll hold a car for 15 or 20 years or however long it is, so those things do come up. Now, I got to tell you on a side note, which is one of the stocks that I actually have in my trading account because I own two of the cars, or we own two of the cars. Tesla's been incredible for this, knock on wood. We have a 2014 Tesla that we spent less than $400 in repairs over the past, what's that, 10 years. Other than tires and windshield wipers, because we haven't even had to replace the brakes because of the regenerative braking. You don't use the brakes as much, and the new one's even better. When my car eventually crapped out, unfortunately, because it was my mom's car, so it was super sentimental, and I really didn't plan to sell it forever. But unfortunately, eventually it broke, and I picked up a less expensive Tesla model. It's amazing how strong the regenerative braking is, and I can go from 50 miles an hour to zero relatively quickly without even touching the brakes, which is really incredible, and tells me I'm going to get 300,000 or 400,000 miles on that car with never having to replace the brakes. And when I think about the other one, the only things we've had to have done is some cover above the tire came off that they charged us like $79. And then at one point a few years back, one of the door handles wasn't opening, and they were able to fix that, and that was like $200. Well, we did have one other repair. We had to repair the actual screen, and that was rather expensive. I want to say it was, $2,000 type of expensive. But a few years later, we got a notice in the mail, which is why I didn't count it, that it had turned out to be a recall item, and we got reimbursed for that. So over 10 years, those are the only three things we've had to have done. Of course, we've had to do windshield wipers from time to time, but we live in Vegas, so we forget about it half the time until it rains, and then it's like, oh, geez, it's been 2 years since I've replaced the windshield wipers. And then, of course, tires we've done, I think we did them once, and the car has over 140,000 miles on it. It's really amazing. And the battery hasn't died or degenerated or whatever the word is as quickly as people anticipated. So I think we could have another 10 years in the car before we have a problem. The other thing I've thought of that I don't know is, if I get to the point that I have to get a new battery, do we actually get the new battery that gets something like 400 miles on a charge? Because the one we got when we originally had the car only got 200 and change. I don't remember the exact amount. But if we actually could just update the battery, as much as people say how expensive it is, because maybe it's a $15,000 expense, it's really about the only thing in the car other than shocks and struts, which seem to be just fine at this point. If it costs us $15,000 to have a new battery that gets a 400-mile charge and is more efficient than the one we currently have, to me, that's a really inexpensive way to get a new car, because the rest of the car is a great car with really comfortable seats, good steering, everything else. I'd be happy to upgrade the battery and think of it as a new car. Anyway, I didn't really mean to rant about Tesla that long. And I did want to talk about overspending as well as real estate, which go hand in hand. So forgive that I say them both, and maybe you're like, what? What does that have to do? But real estate, and before I talk about it a bit, understand I do mortgages as well. So maybe I'm a little bit biased, but I got into mortgages because I love real estate, and that's kind of my passion. I've gravitated out of some of it as the real estate prices have gone up so much. Some of it I regret because the prices seem to keep going. And what I can say is if inflation continues, the prices will keep going as well, despite people thinking, geez, it's too expensive and interest rates are too high, so there's just no way. I tell you, when people think there's just no way, things tend to continue. But part of why I want to connect it to overspending is if you don't overspend and you don't bite off more than you can chew, I do see a lot of value in owning a home as well. I was watching Michael Bordenero, who I really like, even though I disagree a lot of times with the things he talks about, but he's super reasonable and super rational, so I don't want to overstate it. It's just sometimes I have a different opinion on it. He sees the economy as in this terrible place because he's looking at people that are struggling, and I know people are struggling, so I really don't mean this the wrong way. But the overall economy is doing better than they expected, which is why they haven't had to cut interest rates. And when I go out and look around, plenty of places are super busy still. If that continues, despite a lot of people being pushed out of the market that can't afford housing anymore, there are a lot of people who still can. But he also brings up a lot of good points about things have gotten more expensive, repairs on houses. Same with your heating and electric bills, the water bills, the insurance bills. All of these things have gone up as well. And a lot of people, when they buy a house, they just look at the mortgage payment. They don't think about all those other things. And then one of the things I mentioned earlier is what happens when your air conditioner breaks or your water heater, or if you have things that make the water cleaner. I'm having one of those brain farts, so forgive me. But these things do happen. So you need to make sure you can not just afford the mortgage, but you're okay if some unexpected things come around as well, and have a bit of a savings to be able to afford them. Now, don't get overexcited and buy the ones that are out of your price range. Just stick with what you're comfortable with. And I don't see anything wrong with owning a home, even though the math of renting makes more sense right now, mainly because I think it's going to become less and less affordable. I just kind of do. I can't explain why, but markets are markets. They tend to go much further than people think. And my real thought as to what's going to happen with the real estate market is it's just going to stay this way for so long until it finally makes more sense, until people get used to it, and it's just the new way that real estate is. The people who I see coming into my office who are looking to buy, they have really good credit and they can afford the homes, and they're deciding how much to put down, not based on I only have this and it's all I can afford, but what makes the most sense in terms of the payment, the interest rate, so on and so forth. So for those of you who don't know, depending on what you put down, it can significantly affect your interest rate, and not always more. To be fair, less than 20%, since it has mortgage insurance on a conventional loan, tends to have a little bit better of an interest rate than putting exactly 20% down. Also, those of you who think you have to put 20% down, that's just something that comes from years ago because it gets rid of mortgage insurance, and that seems to be what people thought. But if you put 5 or 10% down on a home, the interest rate is sometimes a little bit better than 20% because that is less risk for the investor. Mortgage insurance is a real thing. It is insurance, and it protects the wholesaler. You are paying insurance so that if you default on the loan, they're covered. Well, that's a lot more comfortable as a lender to know that if somebody stops making their payments, that the mortgage insurance kicks in and you're kind of covered on it. At 20% down, that's when you can get rid of mortgage insurance. But there is a little bit more risk to the investor because if you don't make your payments, they don't have the insurance anymore. Now, as you put a higher down payment, it could potentially give a better interest rate, and then you have to just weigh out what makes the most sense and where it fits best for you. Back to the original point, though, the people who are coming in currently, they tend to be in a position that they can afford 20, maybe even 30% down. Maybe even they're in the position to pay cash, but they just don't want to. So they can weigh out the different things, see what makes the most sense. It is not people that were coming to me. It's amazing how when I first started, I could qualify people making $12 an hour who barely had enough for down payment and needed a little bit higher of an interest rate to cover closing costs, and they were able to get into a home and pay the bills. Well, that has changed. And unfortunately, for those who get upset about it, I just don't see it going back to that. And I see it continuing the way it is. I wish it were different, but I try not to fight the markets. I try just to go with them. And that's where I go back to. Just stay in your budget. Make sure you can afford it, whatever that amount is. Make sure you're in a position that you aren't what I call house poor, where you can't still go out and enjoy life and have fun. Because, one of the people in the comment sections, his name is Lance, he makes a comment all the time about the trip I'm on and calls it making memories. Making memories is really important too. As much as I want to encourage people to save for their future, which I really do, making memories with your family is so important because what else is there? We got to go out and enjoy life and have fun as well. I saw a video about how much people work, and in the US, we have the least amount of days off. We work the longest hours. We focus on money all the time. Here in Europe, there is a different type of balance. People seem a little bit more relaxed, even though they have less things, and they seem a little less jealous about what each other has. It's a really interesting dynamic. It's hard for me to change who I am because I grew up in the US and I work. But you have to remember that making memories and spending time and having fun is probably important as well. Anyway, super long video. I had some quiet time. I was able to talk. I'm waiting for the markets to open. If you haven't already, do me a favor and hit that subscribe button. Also hit the like button, make some comments. I can't tell you how much I appreciate that stuff. It helps the channel out, helps people find it. And trust me, even though it's grown from 100 people to 30,000 plus, which I'm really floored by, YouTube is not going to be a source of life. It's just fun for me to be able to find a place to talk about things. Even my back that's been a pain in the butt and feeling like, geez, I'm getting old quicker than I thought, and sure don't want my wife to take care of me so early. Anyway, again, thumbs up, like, subscribe, make comments, reach out, whatever you want. I'm happy to chat about whatever. Have a great day.